So I'm out here doing a review of my own model. I do have a trade running. Just want to show you what it is that I'm cooking here. See this key level, it says the 1 hour new day fair value gap. Let's go into the 1 hour. 1H. Just want to show you what I'm cooking here. Then I'll explain. So essentially, this is the new day, which is the 2nd of August. And if you can tell, with August, we opened with a fair value gap. Now that fair value gap, it begins the new trading day. So in my language, I call that the new day fair value gap, and that is the low, and this is the high. So here, this was London session. Now, if we drop into the London session, and of course, our London session is as follows. We are looking for an opening range. An opening range is 30 minutes long, and it is the first presented fair value gap. Within that 30 minutes, we are looking for the first inefficiency. So that inefficiency, it acts as a support or a resistance. Now the first opening range of the day that we have is from 1:30 to 2 o'clock. Now I'm gonna go in and give you a crude depiction of what I am talking about. Now I do have the New York session time zone. That's what I normally use all the time. So this is what we're working with back in London session. So we've had our 1 hour new day fair value gap high and the fair value gap low. So you can clearly see that we've had some kind of a support in here, and there goes the London session. Now let me zoom in so that we can appreciate the initial fair value gap of London, which, by the way, we call it the first presented fair value gap. It looks like this. Let me just show you the time axis. You can clearly see it says 1:30 there. It acts as a support. And what does it do? It goes higher, prints this high, then comes back one more time, right? It comes back one more time, and then boop, it uses that fair value gap again. Why didn't it utilize this one here? Why didn't it use this one here? Oh, this one here. See, this fair value gap is really good. It's like a support and resistance. So it uses that and goes higher to clear out the initial highs of London. So after those London highs have been taken, remember we have the fair value gap. The fair value gap on the 1 hour time frame. That's where we could potentially draw towards. Okay, that's where we can potentially draw towards. So we've taken the initial high of the day, we've taken the London high right here, we have accumulated on the downside. So they want to bring the market into that fair value gap so that they can accumulate more long positions to go higher. See that? So that's the model for London session. All right, so in order for us to go long, we want the market to go higher, but we are not just going to do it with the London opening range fair value gap, because it's outside of the 1 hour time frame fair value gap. That's the rule. If it's outside of this fair value gap, we don't trade it. Okay, but price action utilizes it to go bearish inside of that. And by the way, this whole portion here, look at that, that is 6 a.m. 6 a.m. is New York opening session. So around the New York opening session, here's what I did. All right, I went into the 17th minute candlestick, which prints this fair value gap, in this fair value gap, it is encroaching the 50% of the 1 hour time frame new day fair value gap. So that's why I had my entry inside of that fair value gap. I noticed that the New York session has a willingness to want to go higher. Remember that they are accumulating inside of the 1 hour time frame fair value gap. So they are accumulating there, goes higher, creates a market structure shift, prints relative equal highs, then it draws back lower to accumulate long positions. So that's where I have my entry at. So where is it that they are taking profit? Way up there, way up there. So I'm just utilizing the first inefficiency of the opening ranges. So I've also got the New York opening range, which is from 7 o'clock to 7:30. 7 o'clock to 7:30, the inefficiency that I could have used for this particular trade. Let's see, 7 a.m., right? 7 a.m. is right here. So 7 a.m., we have this huge inefficiency. So I'm just going to draw it, this huge inefficiency here, right there. So then that inefficiency, I wouldn't count on it as a long opportunity because it's outside of this guy here. Remember this guy, it is outside of it. Same thing with the London session, fair value gap. They're both outside, so they're not to be utilized for going long unless they're inside, just like this guy here. So my stop loss is safe as long as my stop loss is above the consequent enroachment here, just at this particular low, then I'm good.